Good afternoon, ladies and gentlemen. Welcome back. It's Fed Day.
Happy Fed Day.
It is Fed Day, baby. I'm feeling good. Yeah, I mean, look, markets are ripe and ready to move. I had a good day trading. It was actually very choppy out there today, but ended up taking a nice one and done short on gold today. Mike, how was your Fed day of trading this morning?
You know, I think it was, since we were trading on the floor together, I think it was the same as yours. Stressful.
Yeah. Up, down.
I mean, I really don't like these days. I mean, we're waiting for some old fart to come on and dictate the rest of our where we're going. So
yeah, these days suck. I mean, they absolutely suck. There's no good trading during these days until later.
Oh, I like you did a poll. Good job, Tyler.
I thought I'd spice it up a little bit and see what our fellow bulls and bears are thinking.
Well, we know where our resident bull's saying, Mark, 400 baby. Simon 390. That's good.
So
I guess my shorts are going to work out.
Right, yeah, we got some bulls coming in today. All right. Oh, Mal's in, so we must get we must have a 378 in play here.
Mal wants to know why there's not other. As far as 300.
Yeah, right. I know. Well, I put a neither in there, so feel free to put neither and then put in what where you think it's going to go. If you guys have an opinion, put it in where you think it's going to go. But
yeah, well, I mean, look, we've had some good Fed days here recently. We've done very well trading live. So I see JT's in the house.
We are in the house, baby.
I mean, look, I this is going to be, I don't know, man. I mean, I was kind of surprised by the bleed off action this morning, but I really, I mean, it was like just almost no action pre-market, meaning until we got ADP, obviously. It was pretty much just, I mean, the range is really tight, stuck into the same range we were in yesterday, which was really tight. And typically when you get that tight range, you get a nice big move out of news events. So we'll see if that kind of plays out today. But the other thing is too, if you look at the futures contracts volume, I mean, we're at 50% less than what we typically see from
Fed Day. Really? On fucking new issue day?
Oh, dude, what the fuck?
All right, I think we're back. No. Yeah, we're back. All right, you got to join Zoom, though.
Me?
Am I? Yeah, you got to join your Zoom, bro.
Do I have to reopen Zoom?
You have to join your Zoom. I think we're back. Guys, the Fed clearly doesn't want us to freaking...
This is
The Fed clearly doesn't want us to go live during their meeting today.
Are you muted, Ty?
What?
Are you muted?
No, we're not muted. We're good.
Okay. All right. So, give us a thumbs up, man, if you can hear us. The funniest thing, the only thing I could think of is Wolf of Wall Street. On new issue day, you going to clean that effing fucking
fish
tank on new issue day? So, just crazy. Sorry about that. Having some technical difficulties, and I blame Biden. I think he did it.
That Biden just didn't want us on stream today. But anyways,
we are on, right?
Yeah, we're on. We are on. We're good. We just lost half our viewers after that, but that's fine.
Whatever.
They'll filter
Whatever.
back.
We don't want it. Look, man.
Well, you know what? We got the bulls in the chat, so we lost all the bears, it seems like.
Yeah, the bears jump ship quick. I mean, they're already depressed, so we just want the bulls.
Oh man, but yeah. So look, obviously Fed Day. ADP came out today, and holy shit, dude. not that we really care about ADP, but those numbers were insane.
Yeah, I mean, ADP came out surprised to the upside. I mean, typically we obviously don't care about ADP, but because it's a Fed day and it's really one of the first, or last employment info piece of the puzzle we're going to get before the Fed, blows up the markets with its meeting. The market was a little bit more sensitive to that. And you're right. I mean, look, the labor market, we know it, is not going anywhere.
No.
Okay. You can't take a stick of dynamite and blow up this labor market. So I just don't know what to say.
Yeah. So for those of you, I'm sure you all know, but numbers came in at 239,000 jobs from previous and revised down 192,000 jobs. Forecasting 185,000 jobs. So just massive explosion there. So still can't stop the labor market, baby. Crude oil inventories came out, blew out expectations as well. Minus 3.1 million barrels. So, yeah.
Yeah, and we had, we started it off pre-market with China basically reconfirming the zero COVID policy. So, you have Apple that was later, especially with the area around Foxconn, basically being in lockdown for 7 days. So that's what you're seeing in some of the weakness in Apple.
Yeah, and then you also had that also kind of helped with oil and everything is U.S. The Pentagon came out and said within 48 hours, Iran is going to attack Saudis. So, so that caused some conflict out in the market as well.
Yeah. So, I mean, look, it's, you look at yesterday's trading action, you look at today's trading action, some decent action. I had some good action, actually, some good trades in some stocks, but pretty much the calm before the storm. Everybody just kind of waiting for Big Daddy Powell to deliver whatever he's going to deliver.
Lovely. But yeah. So I mean nothing too crazy out there today, but why don't you if you pull up your handy dandy charts and show us the lovely price action we saw today in the market and kind of go from there.
Yeah. All right. Let's go through this. Let's go through. I like to call it State of the Union, Ty.
Yeah.
State of where we are prior to. This is like, look, we are getting ready to head into the game. The game starts at 2:00. This is what you do as a trader. You game plan. You go through the markets. You look at scenarios. You look at levels. And we always talk about it's not just about levels. It's about how a stock trades around those levels. So let's kind of take a look and see what we see here. Starting off with the SPY monthly chart, we can see here, we talked about it, October, such a good month for the markets. Nice bounce off the 50% retracement level from COVID. You got a nice bounce off of the 50 on the on the monthly chart. This month, kind of hanging in there, pretty much where we ended last month. So we'll see where that kind of takes us. But, if you look at the weekly chart, we talked about this trend line here, kind of getting rejected at this trend line after a nice support off the 200. We saw in 2019, nice support off the 200 on the weekly chart. And we had the one of the best bull runs in a long time once we reclaimed the 200 here. So obviously an important area of confluence for the markets. And right now, sitting above it, trying to maybe base and get a little bit better. But if you look at the daily chart, different story here. 50 moving average kind of providing support. Mark mentioned it in Discord that, providing a nice level of support. You're right, Mark. Holding the area right in here. We kind of, on this most recent run up here, we kind of ran up into the top of this target zone that we had already kind of allocated as a possible topping point, and now we're getting a nice little pullback in here So we'll see. We're still, you kind of got the 9 moving average and the 50 kind of hanging out here all at once. If you look at the 4-hour chart, Ty, what do you see?
Yeah, so 4 hour looking kind of dicey in here. So we're starting to break through, and you can already see it on your chart. We're starting to break through this trend line that you have drawn. And so technically not a break of structure yet until we break, this 375 area from this previous touch of the trend line. But it's showing you that we're slowing momentum. We have this 4 hour double top here. We came up, retested that 4 hour neckline, and now we're breaking through the trend line here. So you're clearly seeing Friday's move coming into, being retraced, and we're starting to break this trend line here, and we're losing some of this momentum. So seems like we're rolling over a little bit. So if things come in line here, we should start seeing that continuation there.
You know what I kind of like, Ty? You kind of, showing that double top in there. Could we, and I'm saying we are, could we be setting up for maybe a new head and shoulders pattern getting ready to form on the 4 hour? If you kind of look at, from this shoulder in here, what would be kind of interesting is if we kind of came back down here, maybe rallied back up, form a shoulder sideways in here, and then just drop.
Yep.
So,
yeah, for sure.
yeah,
see
so
that.
it's something I'd definitely be watching out, and definitely something to keep an eye. As far as the 15-minute, I kind of, I talked about this one last time. We were up here, right? We kind of, this was our topping zone. We kind of failed up here, pulled back, and then we broke out for one 15-minute bar, Ty. Okay. Just one 15-minute bar, and then we couldn't hold that area, and it got rejected. We're now below, by the way, the 5 EMA on the daily chart. The 5 EMA also starting to round, maybe turn over. So while we had been in a nice bullish stance, this definitely goes and plays towards your maybe we're starting to change character narrative.
Yeah, definitely.
If you look at the intraday SPY, VWAP pretty much a lid. You had this double top here earlier today, 10:30, 12:15 area as far as this double top. VWAP, you still a lid. You can see we raced off the bottom, rejected on VWAP, and now we're kind of just angling, waiting for the inevitable to happen.
And if you were trading that price action in the morning with that barcoding, good luck.
Yeah, that's true. And this is, we talked about this, and look at this. This is just nasty.
Oh.
It's just frustrating, nasty. It couldn't even give us a little bit of action in the morning.
Right.
It just wasn't to be. Tech weaker. Weak as expected, again, below the 50, where SPY's holding that as support. Their tech now below the 9 and the 21, so they're below all their moving averages, opening the door for the June lows, and then also possible new lows. So we'll see what happens. Tech just not able to get any kind of momentum going at all. It's pretty much just been the escalator ride down. They haven't even gotten back up the VWAP where the SPY at least, got rejected there. Small caps, which had been our market generals leading the way. Interesting, getting rejected at this trend line here. Tried to get up to the 200. 200 feverishly trying to come down, sloping 200. We thought maybe they would pop up and get rejected in there. Did not happen, which, I'd rather have seen that rejection, Ty.
Yeah. Yeah, I was hoping we get that rejection. We'd maybe even get this like gap fill here, and then we head down. But we kind of swerved both of those ideas. So
yeah, which kind of maybe says maybe we're not done, but we'll see. We'll see what we got. The Dow, you yelled at me yesterday because I didn't keep the Dow charts on my chart matrix. So here you go, Ty.
The Dow, baby.
The Dow, baby. Look at that green candle, man.
I know the Dow's hanging in there, dude. It's hanging in above its 200 and doesn't want to go anywhere. I tell you, if you're looking for a drop in the markets, the Dow has a lot more room to catch up to the other.
Dow tells
other
you.
indices.
Dow says not happening.
That's what I'm saying.
They didn't even break yesterday's lows.
Dow's holding up. It's like, bro, we're going up. What are you guys doing? Everyone's just repositioning themselves in the ES. So it's like it's before it goes up.
Choo-choo train, man.
Right.
Choo-choo train up, man. The Dow, best October since 1900. Rates stubbornly just kind of hanging in here. You know, we thought we were going to get a breakdown here. We thought we were going to get a breakdown here and finally maybe break this active sequence. But the 21 is held as support. The 4% obviously is the bellwether line that you want to watch. And rates just, you know, the calm before the storm, kind of waiting to see what we get. But we'll have to see. You know, almost looking like possible head and shoulders pattern working here, Ty.
Yeah, it does. You know, I was back testing the last couple of events during my show, and notably the last few rate hikes we've done, the day of the announcement, there was really no directional movement in the rates at all. It was the following day, so that might give us a clear move one way or the other into the week. So
yeah, I like that. We'll have to see. So that's one of the three horsemen that we're going to follow, that we have been following for the last couple months. The Dixie, I know you're going to talk about that, but look at these 2 days, almost mirror each other.
yeah.
I mean, that's crazy, but I'll wait to see what your analysis is on that. And the VIX, I thought we'd maybe get a little bit more of a breakdown on the VIX, but we haven't gotten it. So we're kind of back in this chop zone here, which I don't know. So last time we had a nice little rally, you could see what the VIX did. If we start rallying out of here, if the VIX starts rallying out of here, maybe something of note that you kind of have this higher low in here.
Yeah, sure.
So we'll be watching them. You know, kind of really weird day. XBI hanging above its 50, just flat line. We had some positive action off of earnings on AMD, which we'll talk about in a little bit. And, you know, the ES, and I'm going to, you know, when I come back from Tyler, I'm going to kind of go into my ES zones and what we're looking at. But you know, it's kind of setting up, I think, for a nice couple trades. So I think we're going to have a good day trading the FOMC. We typically do a good job with that. So, but before we get in, and we're going to get into a Fed preview here, what to look for. We'll get into where we think we're going from here. So, but before we do that, a lot of that's predicated on what you're thinking about with the dollar. Ty, I know you had a great trade in gold. And guess what? My number one trade today.
I can't believe you.
Oil. Call Simon. Is Simon still in here? Okay. Call me the oil baron. Okay. I had two positive trades in oil. I jumped in, hijacked your show for 2 times, and thank you very much. I am the oil trader now.
You know, it gave me exactly what I wanted at 10:15, but then I didn't see it. So this is the day we get Mike to trade oil. Yeah, Simon. I'm
an oil trader now.
We're corrupting them.
Well, I mean, shit. All the other stuff was just crazy. So I said, you know what? I'll just go.
Exactly. Oil was the only really clean trader out there today. So good for you.
Thank you. Thank you.
But yeah,
Simon getting wicked out. He said, "Oil's hard to trade." I don't think
dude.
oil's hard.
Oil's the easiest thing to trade on the market. Are you shitting me? But yeah. So look, taking a look at the dollar here. It was interesting today. So we're actually creating, and I think we start pumping up in here. Although Mal's got me really wanting to take a short on the down now, because he's like it's in for the largest puke of all the indices. So I'm about to go in short on the Dow here, but looking at the dollar, we're showing a lot of exhaustion in a lot of dip buying areas at this 110 zone. We're still maintaining this channel in here, but what we're doing is we're creating this nice double bottom, I think, before we start accelerating back out of here. Looking at the last 2 days of price action, we've seen sellers try to push it down. Didn't go anywhere, and it got absorbed right away. And now we're sitting right under this 111.8 zone, which is a very important inflection zone for the dollar, for the bulls and bears. And so if we can get through this 111.8, then we have clear room to 113, 113.5. So dollar setting up as if it wants to keep going. We had a nice 4-hour engulfing candlestick on the last 4 hour, and we're kind of marching out of here currently. So creating these higher lows, it's really setting up for a really nice rally, I think. So yeah, so we'll see if we can get through 111.8. We're clear to go. But looking at intraday price action here, flagging it the open of the day. Right here is the open of the day, and we're kind of just flagging it there. So if we can break through and consolidate above the open, we should be good to go. So it'll be something to watch here. Looking at gold. This gold short really tested my patience.
It tested my patience because I had to hear you bitch and whine the whole fucking morning.
I was sitting here like, motherfucker, the dollar's going up, drop already. This thing, dude, was so irritating. So I mean, I was sitting in this thing. So looking at the 5-minute, I was short. First off, why was I short? This area, this 1656 to 1658 zone, provided a lot of rejection in the past with gold here. Looking at this whole area, I mean, big area of rejection. So I wanted to take shorts off of that. We seemed like we were kind of stalling here with a lot of wicks. We had initially had a lot of wicks in the zone, pop through and then rejected it. So I took a short somewhere right in here as we were flagging at this level. As we were flagging at this level, I took a short in here, and I was just sitting in this thing, just barcoding right here, waiting for it to just drop. And then it finally got some momentum and dropped, and I ended up getting out right around 1651, I believe it was. Saw a short from here, wrote it down to 1651. I should have made I could have made like 19,000 on it if I had held it to the bottom, but ended up working out really well. Nice gold shorts, but looking at current price action, I think it's setting up for a really nice drop. And so it kind of goes along with my thesis, technically speaking, with the dollar continuing. That means gold's going to drop. And looking at gold here, we have these nice descending highs that gold tried and attempted to break through this morning, and now it failed, and now we're back below that trend line here. And so what I'd expect is it to pump up a little bit, retest that trend line, and then drop down towards like 1630. And you can see on the 4-hour, it confirms that thesis that we have a nice, liquidity grab to where we have that bullish breakthrough right here, this bullish break, and this big bearish engulfing. And so that's a nice grab right there through this trend line, and it's just so we should have some continued momentum to the downside. So going to have, I think, some really good trading in gold because we had this big up move overnight, and now we're back at the open of the day. So I think we're in for some pretty decent momentum to the downside here with gold. But we'll see as we get closer to the meeting. Looking at oil. Oil had very easy day today. What's going on, Enderwigan? Fed day. Yeah, baby. Enderwigan's in the house. So yeah, oil, pretty clean trader today. I was looking at one of two things. Initially, I was looking at really what it did was a double bottom for a rally back up, and I wanted to get it towards, I think it was 89.50 area, these wicks. And that was my initial thing, but then I was like, all right, well, maybe I can get a short off VWAP to head back down. Then I'll look for it. Didn't get the VWAP short. Ended up taking too long to play out, but this ended up being a perfect entry for the longs here. Bullish engulfing, rejection, higher low at here. That would have been just a clean move to 89.50 here. So missed that move, but ended up working out really well. Looking at current price action here, the daily is actually sitting right above. If we can close up here, we're sitting right through this liquidity zone, so we can have a lot of momentum back up towards 95. But we'll see what happens today. Oil typically doesn't have much movement off of Fed days anyway, and so looking at price action, if the 4-hour closes above this 90, then I think we're clear to go up towards 94, 95 area. So definitely in for some continued longs on oil, especially if we get Iran to actually attack Saudi. That's going to cause oil to spike to 95 and whatever. So oil's looking good for continued longs here. Oh, risk on asset, Bitcoin.
Yeah, baby.
Bitcoin is sitting right on top of this ledge here, and it's like bull flagging on top of this 20,500 where we broke above before. So going to be interesting that we're sitting right at this level. So typically Bitcoin, whenever the market runs and Bitcoin doesn't, it's like it's fade the market and Bitcoin's not moving. So I'm looking to see if Bitcoin gives up these wicks and the lows of 20,300 here, then I think we start seeing a puke down to like 19,600, and that'll cause the market to puke as well. So, however, we are bull flagging here, and we are holding an interesting level. So if we can pick up some momentum above maybe the high a day and start pushing towards highs, maybe we start bringing up the market and we start getting some type of rally. So going to be interesting, kind of right in the middle of this, coiled really tightly in here. So I'll be watching this 20,560 and then this 20,350 to give me an idea on where's the sentiment at right now. But yeah, that's everything.
Wait a minute. What about Dogecoin, baby?
Oh, Dogecoin. Oh man, Dogecoin.
Come on, man. I mean, it's rolling, right?
No. Dude, we already rolled. Man, this thing's rolling back over here. We're in this zone here I talked about where it's going to just really, it's not going to go anywhere through this zone. So, hey, you want to make some good money, you can make it to the short side and fucking short it down for 50%. Make some money on the down. It's so fucking crazy. Is you could have made 150% on the upside. But yet, all right, I guess I'll make 50% to the downside. But, but yeah, Dogecoin, really, I think that it's out of the limelight now, and it's had its move. But it was a fun run. But yeah, that's
awesome.
It for me. So back to you, Mikey Mike.
Loving it. Where'd my Zoom go? I have no idea where you went. You're hiding somewhere here.
Yeah, I'm in the bushes till Powell comes out.
Sorry, I'm trying to trade and.
Oh, he's trading already, guys.
Make
money
shit. And.
It's bad when Mike's trading already. Just kidding.
Yeah, we're gonna trade live. We always trade live during Fed. So, and we've had some. I tell you, we've done well. We've done well trading.
Yeah.
The last really 2 Fed events and CPI event, we've traded. We've knocked it out of the park. We've had like 3 or 4 really just outstanding trades. So we'll see. We're gonna keep it a little light though because I don't know. This is a weird one. Yeah, I had some good trades today. We'll go through some stocks just real quick, and then I want to go into a Fed preview for you guys, and then talk about where we think the market. Look at the levels that we need to watch and the levels we'll be watching. So when we're trading today. Tyler's going to be trading as well live through this, so we'll see.
Yeah. Go
me
gold.
against Tyler. Let's go, baby.
Right. Me against Mikey. I'm putting a new poll out there, guys.
Yeah, put a poll out. Well, all you got to do is put a poll out. Okay, will Mike have any patience? Because that was the theme of my day with my trades today. But anyhow... Apple, I did want to bring up Apple because Apple gapping down this morning on the news that, the area where Foxconn is being shut down today. And so that's something that will be interesting. Obviously, they're shut down for 7 days now in the COVID zero policy. So Apple's kind of getting hit. And then Apple came out and, there are a lot of negative news on Apple today. So Apple came out and said they're going to freeze hiring for 23. Then you had Senator Warren saying, Apple and Google and some of these tech companies need to be investigated for being involved in the cars. And then I just happened to look at the options on Apple, and there's huge put sweepers going off. So What I kind of partake for that is there's a lot of insurance being bought for all these institutions that bought up and is hiding out in Apple. And trust me, from an institution standpoint, there is a lot of people that are hiding out in Apple, rightfully so. But so if you look at Apple today, just getting really kind of falling off and kind of choppy here. You're not really getting the drop that maybe you expect. And again, look at the volume on Apple Tide. Look at the volume bar.
Yeah.
You almost can't see that bar.
It's non-existent.
Yeah, it's non-existent. But, I did have some decent trades. The Tesla trade, I had a positive Tesla trade this morning. This was on my list to the upside. And, Mikey, again, I took a point out of Tesla, but I mean, I got shooken out in all this, so we took it out of here off the dip buy, and this is where when I threw that quote in on Discord this morning, I was like, F patience. Mike doesn't have any patience because, I let it wick me out in here, into this, and I missed, good. What I was looking for, a good 3-point move, and but it did get a point. That's good, right, Ty?
Oh, yeah.
On Fed Day. Yeah. But I tell you what, and then I was like, yeah, who needs patience? Because AMD, I pretty much top ticked this, baby. And yeah, borderline, I did trade AMD. AMD had earnings. So, and actually, let me unzoom this here. AMD had earnings, and I got questions. Well, Mike, why is AMD going up? Okay, after they just missed on top and bottom line on earnings, and it's easy to know why AMD's going up. AMD's going up because they already pre-warned. Everybody knew going into earnings that they were going to shit the bed. So you shouldn't have been surprised on bad numbers that AMD actually went up pre-market. So that's kind of the reason for that. So stop asking me those questions. Anyhow, I traded AMD. I was looking for a dip buy on this one. I got it right up in here off of VWAP. And again, I was looking for I thought 64, but I got in at 62.88. Okay, right around in here off of VWAP. So I was a little late on my entry. So I said, all right, I just want to point at this thing, 63.88. And Ty, look who top ticked AMD, baby.
Damn, dude, that's a nice move.
Top tick.
I love when
F patience. F patience.
Dude, people are, I think the thing might have leaked or something. Look at the ES, man.
Yeah, well, it's just shorts covering right now. Everybody that's,
Simon said, Tyler, keep Mike busy while ES is running. I was like, yeah, he is busy. Don't tell him that it's running right now.
Yeah, Jesus, don't tell him that. AMD top tick this. That's why I said F patience. It's overrated.
Yeah.
Got out before this nice little drop. So nice little trade in there. Win, we've been trading Win over the last couple days. Win just keeps on, nice dip buys here and Win. Just some good opportunity in that. Airbnb had earnings yesterday, and just surprised about this one. I thought the $100 level would kind of hold. But look at this. I mean, somebody in the pre-market was trying to hold this one up. I mean, you can see right in here, and they eventually lost that battle. Going back to NVIDIA, I mean, semiconductors did get a little run, and, going back to AMD, sorry. NVIDIA would have been the better play, though, and I always talk relationships, and it would have been a lot easier trading NVIDIA because this would have got you a nice 4 or 5 point move. So I did screw up trading AMD. I should have traded NVIDIA, but that's, what are you going to do? Uber, I did get in Uber, got out for like a small 5-cent loss, so nothing to see here. It just wasn't going to go. Saw that early, got out of that. He had a couple other stocks that were zooming. He had EA, Electronic Arts Gaming Company, shooting up 4 or 5% today. Nice big bar off of the 50. That was a nice little buy if you got into that. You had a couple other companies with moving. You had this Sonoma Pharmaceuticals. Look at this run through the 200 and Pierce. I mean, look, it's almost eerily similar to what they did back in August. So nice R vol on what they were trading. You also had this MCY, which had like a 15 R vol, really had some volume going early, pushing through the 50 up 13%. So for them, they really had some traders into that one. And then you also had this what was that other semiconductor? This super microcomputer that, I mean, look at this.
Hell?
Just had a huge R vol, was really running today and still kind of holding up, but nice movement. So you had some stock movements. You also had this riot. This one, this RYAM, kind of pull that one up. Look at this bar, Ty. So up almost 40%. I called this one out early, so this one you could actually popped into. I didn't trade it, but so you had some decent movers. You had some good opportunity. Even though the indices were kind of barcoding it, us future traders not doing too well. But you definitely had some opportunity, and hopefully you took advantage of it. If you didn't, it's never a bad day to not trade during FOMC or before it. But what I want to do now is kind of go back to the ES, and I kind of want to set up levels, and I'd like to bring in the discussion on this, Ty. So I was going through this morning with our traders. We were doing our morning meeting that we had, and I kind of set these levels up, and I kind of liking where we are. So if you look at the ES, if we get that if we get that uber hawkishness, and I'm going to get into it in a minute as far as what we're looking for. I think really, this area here is what I'm targeting to the downside. And I kind of wanted to get your opinion of what you think in here to the on a downside move on a surprise hawkishness.
Yeah. No, 100%. The level I had drawn it was right around this area. So right near your zone. So that's pretty much where I was looking as well.
Yeah. And then if an upside surprise, I'm looking up here. I'm looking at possibly, reaching, wicking this tick, and I'm looking at 41.57 area as far as an area that we could go on an upside surprise. My midpoint that I'm kind of looking at is this area right in here, this 39.10, 39.11 area. And what's interesting, and me and Simon did this morning, if you draw a Fibonacci, right, retracement from this recent peak to the low, look where the 50% level comes in.
Yeah.
Right to the T at that, 39.11 area. So I'm really liking that area. That's my over-underline. As far as going forward today, as far as a setup is concerned, if the market can stay and hold above that level, then I'm bullish and I'm looking for an upward advance. What do you think, Ty?
Yeah, no, I agree. If you hop to like the 1 hour maybe, or something.
Yeah, I can go to go to wherever you want.
Yeah, perfect. So, for me, I'm watching really where we're kind of rejecting right now is, this trend line here. And so if we reject this trend line and push higher above this pivot point here where we had dropped from this big 4 hour drop here, if we can reclaim this level into Fed, then I think that this could have been a little bit of a push down to squeeze up, and then we'll see where we go from there. But 39.24 the highs here. If we do reclaim this 38.53 area, that's where I'd look for it to run. On the flip side, if we do break back below these lows here, then we're heading back down pretty hard.
Yeah, so we got some levels to look at, and that's the key, and as far as what we're looking at, let me go back here. Looking at the 2 minute, this 38.55 level, important level right here. So it'll be interesting to see if this most recent short covering going into the event kind of gets stopped in this area. So we'll see what happens here. But you got IWM, you got ES, and you got the Dow all above their VWAPs. You have tech still a little bit away. Bit away. So we'll be watching this. We got about 10 minutes until the news event. We will be obviously running and trading through the press conference. If you haven't sat through a Fed day, you get, again, we talk about the three moves, right? You got the initial algo move, then you get the counter move, and then you typically the third move is the real move, which is where the market really wants to go. So, don't recommend, I don't recommend, jumping in right away. Let the markets kind of go through its gyrations, draw some Fibonacci's, and then have your levels and know where you want to go. So that's our game plan going forward, Ty, and I think we got a good one.
Yeah, no, definitely. I'm all eyes on gold today, baby.
All eyes on gold. So Tyler's going to be trading gold.
Gold's my trader. Mike, ES, baby, right?
Mike's going to be trading the ES. Yes, indeed. So I'm going to prove all you naysayers wrong.
Oh, no.
All you naysayers going down, baby.
Oh, no, man. Come on.
Here we go. Well, that's because you brought in Enderwingen. I mean, come on. What's he, a Harry Potter character?
I brought some reinforcements in.
Some reinforcements. I hear you. Getting a nice little pop-up in here. As far as the let's go through the Fed meeting. We've got a couple minutes here before. Look, this to me is a pretty straightforward Fed meeting. Okay, 75 basis points seems pretty well locked in. This is not a dot plot Fed meeting, so we're not going to have to worry about projections and really where we think the terminal rate is, stuff like that. Now, we're definitely going to get some information on the terminal rate. That's what the market's going to be focused in on. But the path forward is what the market's going to be looking for. I mean, unless we get some kind of surprise, and a surprise in today's meeting to the dovish side would be 50 basis points. If we get a 50 basis point rate hike, look for upper targets to get hit on the ES, 4,100, 4,000. I think we had right there. So I'm looking, if we get 50 basis points, that's obviously dovish. We got 93% Fed futures counting in 75 basis points. So I think we head right up 4 to 10% gain on the SPY. And that's where you can definitely see those huge gains going forward. If we get 100 basis points, which I know I haven't seen anybody mention this, but I actually think we could get 100 basis point. I think it's a small chance, but I think there's a chance we could see 100 basis point move. Now, if the Fed comes in with a 100 basis point move, look at my downside target because we're heading right there.
Oh, yeah.
We're heading right down there. 6 to 8% move to the downside, I believe, if we get that. But I think this meeting, I think it's going to be pretty straightforward. Like we said, no dot plot. We have to worry about Fed projections. We have to worry about, where they see unemployment, all that stuff. The key to look for in this meeting, what they say about the terminal rate. Now, in the September meeting, we talked about this. Okay, the September meeting, it was 4.6 was the terminal rate that the Fed was looking at. So what does that mean? Well, if we get our 75 basis point hike, then the Fed funds futures rate is going to go up into the 3.75 to 4% range, okay? Which would basically mean that the Fed's looking for maybe a half to 0.75 more in rates going forward. And so you're going to want to look for, the Fed futures, again, has pretty much locked in 75 basis points for November, this meeting. And then there's a 50% chance that we're going to get 75 basis points in December. And then they're pricing in possibly 50 basis points in February. Currently, I think what you're looking at is a 75, 50, 25, 25. And I think that's really where we will be. Yeah, Mark, nobody cares about Canada.
Yeah,
okay? They're a bunch of
their whole system is weighted differently because they have really higher shares of different mortgages and stuff. So you can't really kind of base it off what they're doing.
Yeah, I'm telling you right now, guys. Good choice, F you. And yeah, I'm telling you right now, the Fed cannot afford to be dovish here, okay? Because what happens is, I thought that. Okay, so from Ender's Game, good stuff, Ender Wiggin. So I definitely, if you look at this, the Fed needs, even if they think that CPI is coming down, okay, inflation is moderating, they need tight financial conditions. They need the market down. They need unemployment down. They need the consumer to stop spending, okay? So to me, the chances of some kind of hint at a dovish surprise, I just don't see at all any scenario where you're going to get any kind. I think, to me, and remember, not September, but the meeting before September, in June, the market ran because, in the press conference, everybody counted Powell as being dovish. And so, what did Powell and the Fed governors do, Ty? Jackson Hole.
Yep.
Beat the hell out of the market. They said, nope, we're not doing it. And they talked it down mercifully until we created a new low. So I think you got a greater narrative of that happening than any of this dovish nonsense that everybody seems to be trying to cling to.
Yeah, 100%.
Because, right now, financial conditions have eased, and this is making the Fed's job harder. And if for some reason the market interprets something here that is dovish, then all it means is the Fed's going to have to go harder and longer than they want to go. So the market's making the Fed's job harder, and it's making its own job harder. So that's something that you gotta look at. And let's face it, let's kind of count down what happened since the last meeting. And Ty, you can help me if I miss anything. We've had a CPI that we missed badly. JOLTS was a disaster. Non-farm payrolls last month was incredibly strong. We had GDP third quarter strong. But we did have the Bank of England intervention, right? And you have Canada, and I think you had another central bank kind of, come in a little bit later. So, but I don't see the Fed, seeing that happen. But most recently, just this week, we've also saw the 3-month and the 10-year yield curve invert. And we also saw yesterday the 3-month and 30-year yield curve invert.
Yeah.
So,
are we in a recession?
Yeah. And historically, we talked about the 2 and the 10 years been inverted for a while, and that's what everybody's been talking about. But the Fed talking down that inversion of the 2 and the 10 basically pointed to the 3-month and 10-year. Well, guess what? They can't point to that anymore.
Yeah.
So they can't point to that. So that's something. So the people that are looking for a dovish tilt are thinking that the Fed's going to focus because of that inversion and start defending the economy. But I just don't see that happen. They can't do it. So that's a big thing right there. So we're about 3 minutes to go until we get the actual statement. And then we got to wait a little bit before Powell steps in and does his press conference, which we will run live here and start trading through. Yeah. But looking at this, Ty, I mean, look, we should get 75 basis points. If we get 50 basis points, we're running. If we get 100 basis points, we're sliding. If we get 75 and everything comes in line, I think we go up.
Yeah, agreed.
And the hard part is you got to always look because the market's built to inflict the most pain. And the pain trade here for me is up. So, because I think a lot of people are expecting this market to come down. So, I don't know. It's going to be interesting to see. I think that'll create a lot of FOMO. And so I'm almost leaning to the upside for the market out of this Fed presser. But if you look at the 3-month short-term rates, and we got about a minute now, You really, I mean, it almost looks like they're pricing in almost a 1% surprise, but I'd be really shocked if we got that.
Yeah.
So
Oh man.
so
I'm ready.
Are you ready?
I got my trading finger ready, guys. Let's go. We got this.
All right, you got your trading. What are you trading?
I got my collar. I got my gold collar on.
Oh my God.
Come on. Team gold collar, baby. Come on.
So I'm watching the TNX. We got about 20 seconds in here. I'm going to go custom grid. Don't I love just fucking shit up right before the Fed meeting? That's what I do, man.
Oh, here we
go. Go.
8, 7, 6, 5, 4, 3, 2, 1.
Let's see. I don't see a movement. Oh, there we go.
Oh.
All right, 75 basis points, 1% off the table. So they'd F you on that collar yet, Ty?
No, so it's fucking weird. Damn. That fucking like flash, that was crazy.
We're getting a nice little momentum up in here on the market. So, you know, we're getting the dollar falling off pretty dramatically, and we're getting rates. Rates are kind of still in here, aren't they? Yeah, I mean, you had them flash up. You got the market flashing up here.
Look at this.
75 basis points. All right, well, the Fed says it will take cumulative tightening lags into account. So that's a little bit dovish there.
Damn.
All right, so there's a dovish tilt in here. It says basically take smaller increases possibly into account.
Wow.
All right, nice trade there. I just took a nice little elevator ride up. So this is, yeah, to me, this is dovish, man.
Yeah, for sure.
So I'm going to let the move kind of play out. You know, we need some kind of... We're heading right up to that 3,900 level, so it's going to be interesting to see how the market kind of, you know, reacts around this area here.
Gold is a monster.
So what's going on with gold, Ty?
Ripping, baby. It is just an animal. So the initial reaction slipped my entry, so I got out, and then on that pullback, after I had pulled back to fill out the actual orders, I got back in, and I'm riding this fucking thing right up. Baby. Let's see. Dollar's tanking still, so that's good for gold.
Nice little, yeah, I mean, you got the dollar just, where's the dollar going, man? It's nice little tank here in the dollar.
Yeah, dude, dollar's dropping down to 110, 222. Probably
so we're kind of fighting this resistance in here. Still, you know, you got some folks still getting through. You got the rates starting to fall off. I think, yeah, this is all positive news for the market. So let the market's reaction kind of play out. But
taking profit on gold here, 1660 level. I'm gonna just let it breathe for a little bit now.
Would like to see a little bit of a pullback, Ty.
Yeah, no, definitely agree. Definitely agree. Because I think it's time for it to settle down a little bit going into now the meeting. I don't think I'm going to take a short on gold, but definitely took profit there because I think it's time for gold to stall at 1660 for now. I mean, 1660 is a strong level for gold, so for it to break that before the Fed presser would be pretty interesting.
2 years are down 7 basis points after the Fed decision. Dogecoin is bouncing.
Are you shitting me?
Yeah, I just taken some scalps in here, but I'm kind of waiting for the markets to kind of settle down. I would like to get a little bit more of a pullback into this.
Right.
Uh,
All right, first 5 minute closed on this initial move. So now you have a 5 minute trading range here.
yeah, I agree. You know, it's funny that you mentioned it, Borland. I mean, look, I think that, you know, if we run too far here, it's going to be a problem with the presser.
No, 100%. Yeah, agreed. Wow, the dollar, massive drop on the 5 minute.
Massive drop. Goodbye, dollar.
Good. Good.
Goodbye, dollar. So let's, you know, what you seeing in the markets, Ty? Anything?
Yeah, you know,
I mean, we're not getting any kind of let up in anything here yet.
no, I feel like though Dow's hit its point where it's going to pull back. I'm watching the Dow. I mean, Dow broke this previous high, you know, 32 like 975. So, I mean, for it to rally even farther than this before the presser is going to be really interesting. So, I'm with you. I'd like to see a pullback, but I mean, we'll see what happens. It's right now Dow's kind of consolidating at highs here, so I think we can get a damn gold still going. I mean,
what's interesting to me is we did not get above 3,900. I mean,
right,
and or the 3,911 area. So there's a very cautious move with the dollar and rates puking the way we are. I mean, this is, I mean, but remember, there's usually, you know, there's usually several different, we talked about the 3 areas, you know, we go up and then we kind of reverse and then we go the other way. If this is as much of a pullback as they can garner, we start rallying out of here, then, you know, we could be in for a pretty explosive move out of this area.
yeah.
So
Sure.
Be ready, guys. We could definitely, you know, it looks like they're getting ready
For round 2.
Yeah, it looks like they're getting ready for round 2 here. Let's see what we get. I'm trying to play this, but, you know, I just...
I don't know, man. It's having some problems here at the highs. I really feel like we're going to get a pullback here, some profit taking.
Yeah,
that was
got nicked up in here trying to catch a possible move over 3,900. So I think you're going.
I'd like to see a retracement. Because now it's.
Well, you're starting to get rates kind of pop back up to the 4%.
Right. If I can get gold back, I mean, gold's broken through 1660, so kind of tough for it here. I'd really want to see a pullback before I try to place any more positions. I'm going to be watching the Dow for a little bit here.
Still can't seem to get.
There's a lot of exhaustion here for the Dow, at least. I'm not watching your markets, but. Yeah, TNX under 40. Would be surprised if it stays there. I want to position myself in a Dow short, but I want to wait to see if it runs the highs one more time.
And I think you may see a run in bonds at this point too, at some point. So just got to be careful of this with rates. They could definitely come. I mean, you got the curve getting ready to clock some people. And I agree with that.
Oh man, it's gonna be tough.
So, not much movement in the Fed futures. December was at 59 basis points, now at 57 basis points here.
Yeah, I'm gonna take a stab short in the Dow. All right, let's see if we can get a little bit of a retracement in the Dow here. Yeah, Born Lam, gold's screaming, but I'm
Well, you got the dollar tanking.
Is it still tanking? I'm trying to flip through screens here. Yeah. So let's see if we can get a Dow pullback. That'd be great.
Yeah, we get a little.
Oh, Bornlum, don't throw salt in the wound. I honestly forgot about silver.
Peter, I think their odds of a hawkish conference are very high.
Peter, oh Peter, hey, what's up, Peter?
Yeah,
a dovish statement at hawkish conference. Yeah,
I personally do at least.
All right, Dow, let's go down, baby. Come on. Big Daddy's going to make money on the Dow shorts, gold longs. Come on. Can't stop me. Come on, baby. Let's go.
All right. I needed that. I need that short a little bit.
I'm riding this thing back down. Come on. Let's go. Shitter in the middle. Let's go, baby. Shitter in the middle.
Man, they just can't seem to push this thing, man. It's going, but...
Struggling.
Getting Tesla blew view up. Getting some stocks that were kind of rising on this, kind of falling back. They're not gonna make it easy on you, Ty.
Oh hell no, dude! It's like it's fun. It's like, come on, bring it on.
Tyler, trading shouldn't be fun.
Oh, I have so much fun during FOMC. It's like a game to me.
All right, I agree with the pullback in here. I think we're gonna get.
Yeah, I'm sitting in a
I'd
down
love to see a pullback into the 50%.
100%. Oh, definitely. That's where I'm probably going to ride it to, the 50%. Come on, just fucking everybody get at it. Just sell your positions, all right? Just take profit because the presser's coming on in 15 minutes. Do you really want to sit in your longs heading into the presser? I don't think so. All right. So just come on, trust me. Gold
futures imply traders see 98.4% chance Fed raising 75 basis points at December meeting.
Huh. Interesting.
Well,
wow.
That doesn't sound dovish.
No, that doesn't sound dovish at all.
Are you getting rates starting to fall off the 4%? That's why you're seeing a little bounce in here, but I think I might join you on the short side again.
Yeah, 15-minute volumes coming in. Hopefully it'll bring some... what I'd like to see is a bait and switch on this one. But regardless, I'm sitting in my short in here, so we'll see. At least the initial volatility's gone, so I'm not going to get fucked on this.
Yeah, it's very, very calm before the storm here.
Watching the 5 minutes, see if we can get. Might be 10-minute. What's he looking at? 59.49. What is that?
Just very very calm.
Yeah.
Action here. Still would love to see this pull back into the 50% retracement.
Yeah. I would too. I'm getting concerned a little for these shorts. I mean, I would have liked to see this pullback by now because I feel like it might just be consolidating to blow off some of that steam before it has another leg up. but I'd like to see us start pulling back a little bit now.
Kind of making higher lows, kind of hovering around the 4% on the 10-year. You got the dollar firmly entrenched below the 111 area. So, yeah, we're kind of fighting this 78.6 level here.
Come on, Dow. You're already overdone anyway. I'm taking Mal's side here. I'm like, you got to be just the biggest blow up of indices.
You got to be what?
No, I'm trying to follow Mal's tactic. The Dow's going to be the biggest drop in indices. Come on, Mal, do something.
You know, trying to conjure up the bears ain't going to help you.
Yeah,
I mean,
right.
We're kind of breaking. It's still just the sideways consolidation in here.
I don't like the sideways consolidation at all.
Well, no, because especially on an up leg.
Exactly. It's just
the dollar looks like
for another one.
Yeah, it looks like the rates in the dollar are getting ready to just turn back around.
Right. Keep a short leash on this, but we'll see. Just gonna place my stop above the highs and let it go.
I mean, you got some upper wicks hanging out up there.
Yeah, definitely running into some exhaustion here. So
big bounce in XBI. So XBI biotech's getting a nice big bar out of there. If you look at the 5-minute on ES, we got a couple red dojis with lower highs. So
yeah,
let's see if we can hold that up.
I'm still feeling a little bit of a retracement down to 50%. I still think we can get it. I'm holding for it. 50, here we go. Come on. Need this Dow to break down. Come on, baby. Come on, man.
Yeah, this is going to be as painful as it was this morning.
Well, luckily I'm holding one position. I'm not getting chopped up in this bullshit. So I had one nice gold shorts are very intriguing here. I'm already short the Dow though, so I'm gonna be shorting everything. All right, let's get going down here.
Come on, come to Papa.
Come on down to Daddy. 50%.
If we could break this low in the ES here, then I think you definitely get at least I might get a little spike down.
Dow broke the lows. Dow's pushing down. Oh, Dow, nice move on Dow. All right, let's see if we can get the 50%, and I'm gonna cash out at 50. Nice drop on the Dow here. I think we get more out of it. Keep going.
You're kind of getting a basing action up in here. I like to see rates kind of get moving. So this 50% rate here is the 50% of Friday's move, which had been a tradable area. So we're coming into some support areas in the past. So we'll see if it gets a little bounce out of here. But if we can I'd love to get down to this 50% level.
Agreed.
Of the move.
Agreed. Dow's right there. Come on, it's right there. About to make a bag today on these fucking moves here. Come on. Where's gold? Dollar's basing a little bit.
What time we got the press conference coming on?
2:30 p.m.
Come on. This is a tougher game. again, expected a lot more to the upside than we got.
Yeah. I want some clarity. Come on, pal. Give us some clarity, pal.
5-minute bar's looking good though on the ES. If we switch over to the 5-minute.
Yeah, 5 minutes looking really good.
Where's my 5-minute bar? Really?
Dow's looking good.
There it is. Let's go to the 5-minute. Yeah, look at the 5-minute on the screen, Ty.
Yeah, 5 minutes, nice. Definitely.
Well, we got that wick. I told you we were going to break this low, and then we got that wick down. So that was a nice little wick down into this area. You still, it's nice that we have the dollar kind of basing. It's nice that you have rates kind of basing above 4%, if you're looking for that downward move.
5 minute close, fresh volume in the market. Rates are flirting with 4%. You guys train anything out there?
If you guys see anything, let us know. It's right now just, it's a little surprising, the move, actually. And
VIX and ES going up together, Bornlum says. I tell you, if gold can reach 1666, I'll take a short. But it might not hit it.
I like the gold short at some point.
Yeah. Agreed.
It was 1666.66.
Well, that's what I'm going for. 1666 at the fucking...
You can sell your soul to the devil for this freaking trade. You still, again, nothing more than bear flags right now on the TNX and on the dollar here.
Yeah.
Don't worry, guys. We'll switch over to the press conference once we kind of get moving here. Really need rates to break this bear flag and kind of get it going. Like to see the dollar break that as well.
Pretty calm right now. TNX back above 40. Mal says yes, it is. Yes, it is. Oh, man. Dollars.
Let's kind of recap real quick. We got about 8 minutes until we switch over to the press conference, but we were going in, Fed futures rates had the December meeting at 75 basis points, 50%. That's dropped now. Traders are favoring 50 basis points for December. So that is a dovish shift from what the Fed futures. You saw a drop. The yield curves have gotten steeper. And so, you're seeing a little bit in that play, obviously. Banks should be doing pretty decent. Of course, the banks were surprisingly doing decent before. But, yeah, this is...
Dude, I want to bait and switch on gold so bad. Like, shoot through the highs so I can short it.
You almost get a feel that I don't know. It's going to be interesting. I think we got higher levels to go at some point here today. I'd be really shocked if we were to break the 50% level down here.
Yeah, I guess we'll see how Powell comes out. Powell wants the market down.
Well, he's going to have to talk it down now, that's for sure.
Exactly, right.
Still sitting with these declining tops on the 5-minute, but
Oh man, yeah, it's getting pretty slow in front of the presser. I tell you, if gold can pop these highs here.
the point is, with what they said, it's is it a pivot? Is it not a pivot? I mean, it's a pivot in language. It's not a pivot in actuality.
Right.
So it's basically what we got was an inline report of 75 basis points with really no hawkish tilt towards anything. And I think that's what the market's kind of responding to in here. So you got a new 5-minute bar print and tie. Looks like this should be the deciding factor for you, I think.
Yeah, for sure. And this is the 30-minute close as well, and the next 15-minute close. So, and then we have the presser. So it's gonna should be interesting.
We typically reverse course into the presser sometimes.
Right.
So I don't know. It's like I said, this is just a tough move here for me. Kind of reminds me of this morning's action.
Yeah. Right.
I mean, for crying out loud, please give us something. What's interesting is you do have rates kind of popping up, 4.07, almost breaking this flat top. But you got the dollar just dead.
Yeah.
IWM close to highs. Tech just hanging there, flagging. But you are getting a little pop up in rates here. So let's see if that, that could definitely put a little bit of a lid in things.
I really want to see this. If gold can just bust through these highs, bro, come on.
Well, there you got the 5-minute piercing through the previous 5 minutes high. So maybe, if you need it needs to defend and wick down at this point.
Yeah.
All right, Ty, I tell you what I'm going to do. I'm going to buy. That way it'll go down.
Good. You buy so I can make some money. I'm ready to sell gold, bro. Come on, man.
The terminal Fed futures terminal rate coming down to 4.97 from 5, just a little over 5 where it was before the meeting. Again, not much.
Come on. You can do it. I know you can.
Well, I'm going to hand it over to you, Ty, for the presser.
Yeah, sure. I got it up and ready to go. Right here, right now. Hang on. Where are we at? Oh, there it is. All right, cool. I got it up. All right. Poor Lom. Are we back above the clouds, Mal? Yeah, Mal. Are we back above the clouds?
Yeah, he's talking about the
No, I know. I know. Oh, are we heading to the moon yet?
Man, I didn't know natural gas had moved up 10%. That's pretty crazy.
I didn't either.
All right, well, we're heading up to 3,900 again.
Oh, let me turn on the sound. Guys, let me know if you can hear it and if that works. Once it comes on, obviously. Let me know if you can hear it.
Brago and Jerome.
Let's go. Come on, Jerome. We're ready.
Well, you pierced the 3,900, and now we're...
Come on, give me that bait and switch. Come on, where are we at? What's the dollar doing? Okay, yeah.
Jack shit.
Yeah. Oh, here comes Jerome. Let me know, guys, if the audio is good when he comes on.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate.
Oh.
We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments.
All right, I'm short gold. Let's see if we can get it down.
The U.S. economy has slowed significantly from last year's rapid pace. Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs, and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food, and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2%.
It's gold reversal. Nice. Shorts working
There
out well.
is significant uncertainty around that level of interest rates.
There we go,
Even
baby.
so, we still have some ways to go. And incoming data
There's that
since
dollar
our last
reversal.
meeting suggests that the ultimate
Wow.
level of interest rates will be
Fuck,
higher
I made so much
than
money on this
previously
move. Holy
expected.
shit.
There we go.
Holy
Our
shit.
decisions
I
will
fucking
depend on the
banked on this
totality of
fucking
incoming
move.
data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by
Damn.
meeting and communicate our thinking as clearly as
Nice
possible.
drop. Look at the big
Dude,
bar
I
up.
made so much
Forceful
fucking money on this
steps
gold
to
short.
moderate
Holy
demand
shit.
So that it comes into better alignment
Are you
with
still
supply.
in the other one?
Our overarching focus
on what?
is using our tools to bring
The
inflation
The Dow?
back down to our
No, I got
2%
out of that
goal,
one.
and to keep longer-term inflation
I
expectations
decided to stay with
well
gold.
anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right.
There we go.
Wow, I fucking banked on gold today, dude. Holy shit.
Thank you. Colby Smith with the Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
Nice drop down to
So
the
a couple
38.40.
things on that.
Yep.
We do need to see inflation coming down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that
Damn.
we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
So, what I want to do is put that question of pace in the context of our broader tightening program, if I may, and hit to talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was and has been how fast to go. The second is how high to raise our policy rate, and the third will be eventually how long to remain at a restrictive level. So, on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate, given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate, and we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time, and we put that into our post-meeting statement, because that really does become the important question we think now is how far to go, and I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say...
See, there you go, higher levels than the terminal rate
over time.
of 4.6 in
of course,
September.
With the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming. And it may come as soon as the next meeting or the one after that. No decision has been made. It is likely we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restricted, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs well above the federal funds rate. So I think that at this meeting, the last two meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember though that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will.
Nick Tamaros of the Wall Street Journal. Chair Powell, core PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high 4s, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view, but I would think you'd look more at a forward, a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end of at the federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different, as you know, people who publish an assessment of underlying inflation.
Thank you.
Hi, Chair Powell. Thank you for taking our questions. Gina Smiley with New York Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter term inflation expectations moved up between the last meeting and this meeting, and we don't think those are as indicative, but they may be important in the wage setting process. There's a school of thought that believes that, so that's very concerning. I guess the other thing I would say is that the longer we're now 18 months into this episode of high inflation, and we don't have a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so, the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
Nice rise in rates here.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to the lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show
So
up in
true. The
forecast
market
data.
looks like it's having a heart attack every word.
So,
It does.
the way I would think about that is, it's a commonly for a long time thought that monetary policy works with long and variable lags, and that it works first on financial conditions and then on economic activity, and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter. And the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate.
I'm going to say it
financial
too. Gold
conditions
is
would react,
sexy.
Yeah,
and then
baby.
that would affect economic activity and inflation.
Gold's sexy
Now,
today.
financial conditions react
Woo!
well before in expectation of monetary policy.
Damn.
That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do. And there are plenty of economists that also think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing I would say is it's
Got the
highly
dollar
highly
coming
uncertain.
back,
And
Ty.
so
Good.
from a risk management standpoint, it would be irresponsible not to ignore them. but you want to consider them, but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy, and trying to make good decisions from a risk management standpoint, remembering, of course, that if we were to over tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me say this: it's
Bold, sexy,
it is
baby.
very
Fuck
premature
yeah!
to be
I'm
thinking
getting out
about
right
policy.
now. Back
So
to seeing the
people, when they
crime.
hear
I'm
lags,
out,
they think
dude.
Out,
about
baby!
policy.
I'm winning
in
today.
my view,
Sorry.
Hey!
to think about or be talking about
Sorry.
causing our rate hike. We have a ways to go. Our policies,
Twice?
we need ongoing rate hikes to get to that level of,
Yep.
of sufficiently
Yes,
restrictive.
sir.
And we don't really know exactly where that is. We have a sense,
And
we'll
we're
write down
breaking
in
lows
September, sorry, in
down.
the December meeting a new summary of economic projections, which updates that.
So
But I would
whoever
expect
voted
us
for
to
Tyler,
continue to update it
congratulations,
based on
you
what we're
won.
seeing with incoming data.
You don't even know what I'm.
Don't even need to know, baby.
Thanks, Chair Powell and Neil Irwin with Axios. As you look around the economy, the clearest impact of your tightening so far has been on housing, maybe some venture-funded tech companies. It's been relatively narrow in terms of the labor market, consumer demand, a lot of sectors you don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried
definitely
that your
getting
crimping
some,
housing supply and
hawkish,
might cause problems? For the
I don't know that the channels through which policy works have changed that much.
Look
I
at
would
the
say
dollar,
big
baby.
channel
Back
is
to the
labor
scene of the
market, and
crime.
labor market is
Right.
very,
Ding
very
ding
strong,
border
very
alarm,
strong.
calling
And
it.
household, of
Back
course,
to the
have-
scene of the crime.
have, strong balance sheets. And so we
Come
go
on,
into
baby.
this with
Powell's making the money rain.
a strong labor market and excess demand in the labor market, as you can see through many different things,
Come
and
on,
also
pal, make it rain.
with households who have
Making it
strong
rain.
spending power built up. So
Fuck.
it may take time. It may take resolve. It may take patience. It's likely to get inflation down. It may. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take time, we think. So, sorry, was I getting to your question there? Housing part of it. Yeah. So.
Oh my
You
god.
know, we look at housing, of
Forgot
course,
where I was
housing
going.
is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high.
Look
but
where
they're much higher than
freaking
they've
the
been.
dollar
And
and
you're seeing
freaking
housing
rates
activity
went.
decline.
Man.
Course.
You're seeing housing prices.
The first move is always the
growing
false
at a
move.
faster rate, and in some parts of the country declining. I would say the housing market was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many bidders, no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was very much more carefully managed by the lenders. So it's a very different situation and doesn't appear to present financial stability issues. But no, we do understand that's really where a very big effect of our policies is.
Hi, Victoria Guida with Politico. I wanted to ask about the labor market. You mentioned early on again that job openings are very high compared to available workers, and I'm just curious to what extent you do and don't draw a signal from that. So, for example, if wage growth is slowing, and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus on job openings? What do you see? Are wages what's really
Who
important? How
is
are you
this lady?
thinking about
How
the
does she
labor
get a
market as it relates to
microphone?
inflation?
That is the dumbest
We talk a
fucking
lot about-
question.
about
Right.
vacancies and the vacancy to unemployed rate, but it's just one. It's just another data series. It's been unusually important in this cycle because it's been so out of line. But so has quits, so have wages. So we look at a very wide range of data on the labor market. So I'd start with unemployment, which is typically the single statistic you would look to, is at a 50-year low, 3.5%. We're getting really nothing in labor supply now. We had, I think, a very small increase this year, which we had really thought we would get that back. Most analysts thought we would get some labor supply coming in. You mentioned wages, so I guess I would characterize that as sort of a mixed picture. It's true with average hourly earnings you see, so I would call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation, assuming a reasonable productivity. There with the ECI reading this week, again a mixed picture. The headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some rays of light inside that if you look at private sector workers, that did come down. The compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply. Job creation still exceeds, the sort of the level that would hold the market where it is. So that's the picture. Do we see? We keep looking for signs that sort of the beginning of a gradual softening is happening. Maybe that's there, but it's not. It's not obvious to me because wages aren't coming down; they're just moving sideways at an elevated level, both ECI and average hourly earnings. We want to see. We would love to see vacancies coming down, quits coming down. They are coming down. Vacancies are below their all-time high, but not by as much as we thought because, the data series is volatile. We never take any one reading. We always look at, 2 or 3. So it's a mixed picture. I don't see the case for real softening just yet, but we look at, as I just showed you, we look at a very broad range of data on the labor market.
So do you see wages as being a significant driver of inflation?
I think wages have an effect on inflation, and inflation has an effect on wages. I think that's always been the case. There's always a going back and forth. The question is that really elevated right now? I don't think so. I don't think wages are the principal story of why prices are going up. I don't think that. I also don't think that we see a wage price spiral. But again, it's not something you can, once you see it, you're in trouble. So we don't want to see it. We want wages to go up. We just want them to go up at a level that's sustainable and consistent with 2% inflation. And we do think that given the data that we have, that this labor market can soften without having to soften as much as history would indicate through the unemployment channel. It can soften through job openings declining. We think there's room for that, but we won't know that. That'll be discovered empirically.
Thank you so much. Kayla Tausche from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central banks didn't change course. The new UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments in light of a very strong economy here in the U.S. that would seem to be bucking those trends.
So, of course, we keep close tabs on economic developments and also geopolitical developments that are relevant to the economy abroad. We're in very frequent contact with our foreign counterparts, both through the IMF meetings and the regular meetings with central banks that we have, and I have one this weekend with
Good for you.
many central bankers. So we're in touch with all of that. So I guess it's clearly a difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine, and we're seeing China's having issues with the zero COVID policy, and much slower growth than we're used to seeing. So we see those difficulties. The strong dollar is a challenge for some countries, but we have it, and we take all of that into account in our models. We think about the spillovers and that sort of thing. Here in the United States, we have a strong economy, and we have an economy where inflation is running at 5%. Core PCE inflation, which is a really good indicator of what's going on for us, is the way we see it, is running at 5.1% on a 12-month basis, and sort of similar to that on a 3, 6, and 9-month basis. So we know that we need to use our tools to get inflation under control. The world's not going to be better off if we fail to do that. That's a task we need to do. Price stability in the United States is a good thing for the global economy over a long period of time. Price stability is the kind of thing that pays dividends for our economy for decades, hopefully. Even though it may be difficult to get it back, getting it back is something that provides value to the people we serve for the long run.
If I could just follow up on that. Thank you. The Fed has acknowledged in the past that the tools that you have don't affect things like energy and food prices that stem from some of those conflicts overseas, and they're some of the biggest pain points for consumers. So as you pursue the current path that you've outlined, is there a risk that some of those prices simply don't come down?
So we don't directly affect, for the most part, food and energy prices, but the demand.
Has she ever heard the concept of core inflation?
The thing about the United States is that we also have strong, in many other jurisdictions, the principle.
She needs to go back to OnlyFans.
Energy. In the United States, we also have a demand issue. We've got an imbalance between demand and supply, which you see in many parts of the economy. So our tools are well suited to work on that problem, and that's what we're doing. You're right, though. We don't, the price of oil is set globally, and it's not something we can affect. I think by the actions that we take, though, we help keep longer-term inflation expectations anchored, and keep the public believing in 2% inflation by the things that we do, even in times when energy is part of the story of why inflation is high.
Hi, Chair Powell, Janelle Marte with Bloomberg. So the Fed is facing 2 more ethics-related incidents with the revision of the financial statements from President Bostic and the President
Nobody
Bullard
cares,
speaking at a closed event.
Right.
So some senators, like Elizabeth Warren, are saying that this is a sign of greater ethics problems at the Fed. Could you talk about what this does to the public's trust in the bank?
Talk about
and
those
what the Fed is
ethics
doing
problems.
to prevent this kind of behavior from becoming.
That's the least of everybody's worries right now.
Sure. So you're right. The public's trust is really.
That's
the
not
Fed's
going to help
and
my
any central bank's
portfolio.
most important
Yeah, exactly.
asset. And anytime one of the policymakers violates or falls short of those rules, we do risk undermining that trust, and we take that very seriously. We do.
We do.
So
Janelle.
at the beginning of our meeting yesterday, actually, we had a committee discussion of the full committee on the importance of holding ourselves individually and collectively accountable for knowing and following the high standard that's set out in our existing rules with respect to both personal investment activities and external communications. We've taken a number of steps, and I would just say we do understand how important those issues are. I would say that our new investment program that we have is up now and running, and actually it was through that the problems with President Bostic's disclosures were discovered when he filed his new disclosures. That's we now have a central group here at the Board of Governors that looks into disclosures and follows them and approves people's disclosures, and also all of their trades. Any trade anyone has to make was covered has to be pre-approved. And there's a lag. It has to be pre-approved 45 days before it happens. So there's no ability to game market. So it's a really good system. It worked here.
Thank God.
And I think we all said to each other yesterday morning, we recommitted to each other and to this institution to hold ourselves to the highest standards. And
Ty, I
avoid these
recommit to you to
problems.
hold myself to the highest
On
standards.
the
Yeah.
investigations
Right.
that are pending.
I don't. So as you know,
Yeah, look, they grabbed the microphone from her right away.
Of course. Who the fuck?
The
Waste of a
matter
question.
concerning President Bostic to the
Ty,
inspector
we
general.
could have
Once
done a
that
better
happens,
Right?
I don't discuss it with the inspector general with anybody. It's just the Inspector General has the ability to do investigations. We
Mr.
don't really have
Powell.
that. So that's what's
Is this over yet? I made my money. I'm ready to go.
Michael McKee from Bloomberg Television and Radio. Earlier this year, you touted the 3-month bill yield out to 18 months as the yield curve with 100% explanatory power. And you said, quote, if it's inverted, that means the Fed's going to cut, which means the economy is weak. That curve is only 2 basis points away from inversion now. So I'm wondering why you are so confident that you have not over-tightened, particularly given that rates...
Finally, an inversion question.
Well, so we do monitor the near-term forward spread. You're right, and that's been our preferred measure. We think it, just empirically, it dominates the ones that people tend to look at, which is 2s, 10s, and things like that. So it's not inverted, and also you have to look at why things, why the rate curve is doing what it's doing. It can be doing that because it expects cuts, or because it expects inflation to come down. In this case, if you're in a situation where the markets are pricing in significant declines in inflation, that's going to affect the forward curve. So yes, we monitor it. You're right, and that's what I would say.
He basically ignored that question.
You also said several meetings ago that the risk of doing too little outweighed.
Don't you just
the
want
risk
to
of
mess
doing
this
too
guy's
much.
hair up?
Is what you're trying to tell us today is
Right.
that risk assessment has changed a little bit?
Well, what's happened is time has passed, and we've raised interest rates by 375 basis points. I would not change a word in that statement, though. I think until we get inflation down, you'll be hearing that from me. Again, if we over tighten, and we don't want to, we want to get this exactly right. But if we over tighten, then we
Somebody
have the
broke
ability
something.
with our tools,
I
which
know.
are powerful, as we showed at the beginning of the pandemic episode. We can support economic activity strongly if that happens, if that's necessary. On the other hand, if you make the mistake in the other direction and you let this drag on, then it's a year or two down the road, and you're realizing inflation behaving the way it can. You're realizing that you didn't actually get it. You have to go back in. By then, the risk really is that it has become entrenched in people's thinking, and the record is that the employment costs, the cost to the people that we don't want to hurt, they go up with the passage of time. That's really how I look at it. So that isn't going to change. What has changed, though, you're right, is we're farther along now, and I think as we're farther along, we're now focused on that. What's the level we need to get to rates, and I don't know what we'll do when we get there. By the way, we'll have to see. There's been no decision or discussion around exactly what steps we would take at that point, but the first thing is to find your way there.
Thank you. Chris Rugaber at Associated Press. Just to go back to housing for a minute, you mentioned the impact that rate increases have had on housing.
Sorry?
Home sales are down 25% in the past year and so forth, but none of this is really showing up, as you know, in the government's inflation measures. And as we go forward, private real-time data is clearly showing these hits to housing. Are you going to need to put a greater weight on that in order to ascertain things like whether there's over-tightening going on? Or will you still focus as much on the more lagging government indicators?
So this is an interesting subject. So I start by saying, I guess, that the measure that's in the CPI and the PCE, it captures rents for all tenants, not just new leases. And that makes sense, actually, because that for that reason, that conceptually that's sort of the right target for monetary policy. And the same thing is true for owner's equivalent rent, which comes off of it's a reweighting of tenant rents. The private measures are of course good at picking up the at the margin the new leases, and they tell you a couple things. One thing is I think right now, if you look at the pattern of that series of the new leases, it's very pro-cyclical. So rents went up much more than the CPI and PCE rents did, and now they're coming down faster. So the implication is that there are still, as non-new leases roll over and become and expire, right? there's still in the pipeline. There's still some significant rate increases coming. Okay, but at some point, once you get through that, the new leases are going to tell you that what they're telling you is there will come a point at which rent inflation will start to come down. But that point is well out from where we are now. So we're well aware of that, of course, and we look at it. And but I would say that in terms of what the right way to think about inflation really is to look at the measure that we do look at, but considering that we also know that at some point you'll see rents coming down.
Great. And just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that something you wanted to see? Is that a problem, or how much that might affect your future policy to see this positive reaction?
We're not targeting any one or two particular things. Our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates.
Here comes the talk down.
Right. I know.
Before we get to
He can't say we
level
need it to reverse.
It's like
of
shit,
interest rates
dude.
that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And that's meant to put that question.
He's like shit.
He's like, oh fuck.
What would I do?
What would I say, man? Was I hawkish? I mean, dovish?
September, the incoming data suggests that that's actually going to be higher, and that's been the pattern. I mean, I would have little confidence that the forecast, if we made a forecast today, if we were doing an SEP today, the pattern has been that one after another they go up, and that'll end when it ends. But there's no sense that
I heard him do that the whole fucking day.
The question caught him off guard here.
The last 12 months of 12-month readings.
Oh, you say it's doing good?
Really
Damn it.
Shit, this is June all over again.
Okay, so I would also say
here we go.
It's premature to discuss pausing.
Look, he is really he's like, hey, what the fuck do I say?
We're not pausing, guys. We're not pivoting.
And the last thing I'll say is that I would want people to understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing our strong policy.
He's like, shit, I gotta talk it down now. Fuck.
Doing that too soon.
Look at him, he's stammering.
I know.
The market's going up. Oh no. Esther.
Edward Lawrence with Fox Business. Thank you, Fed Chairman. So, how big of a headwind is all the fiscal spending to what the Federal Reserve is trying to do to get inflation back to the 2% target?
In theory, it was a headwind this year, but I do think the broader context is that you have households that have these significant amounts of savings and can keep spending. I think those two things do tend to sort of counterbalance each other out. It appears consumer spending is still positive. It's at pretty modest growth levels. It's not shrinking, but people are, the banks that deal with retail customers and many retailers will tell you that the consumers are still buying, and they're still they're fine. So I don't know how big the fiscal headwinds are, and they haven't shown up in the way that we thought they would in restraining spending. So it must have to do with the savings that people have.
What about the spending? There's tens of billions yet to be spent. I mean, from the Inflation Reduction Act, the American Rescue Plan, CHIPS Act, bipartisan infrastructure bill. How does that play into your thinking about the future?
It's demand is going to have some support from those savings, and also from the strong demand that's still in the labor market. We still see pretty significant demand and a tightening labor market in some respects, although I think overall I would say it's not really tightening or loosening. So we see those things, and what those things tell us is that our job is going to require some resolve and some patience over time. We're going to have to stick with this. That's just we take all that as a given. But we know what our objective is, and we know what our tools can do, and that's how we think about it.
Thanks. We'll go to Nancy for the last question.
Finally.
Hi, Chair Powell. Nancy Marshall-Genzer from Marketplace. I'm wondering, has the window for a soft landing
Last question,
narrowed?
Tyler.
Thank
Do you
God.
still think it's possible?
Fuck no.
Has it narrowed? Yes.
Yeah.
Is it still possible? Yes. I think we've always said it was going to be difficult, but I think to the extent rates have to go higher and stay higher for longer, it becomes harder to see the path. It's narrowed. I would say the path is narrowed over the course of the last year.
So that means yes. No.
Hard to say. Hard to say. Again, I would say that the sort of array of data in the labor market is highly unusual, and to many economists, there is a path to. Ordinarily, there's a relationship to GDP going down and vacancies declining.
He doesn't want to say the word recession.
Into unemployment. Or there's Okun's law.
He doesn't want to say the word recession.
Are relationships that are in the data, and they're very real. Data's a little bit different this time, though, because you have this tremendously high level of vacancies, and we think on a very steep part of the beverage curve. All I would say is
beverage curve. Did he say beverage
the job
curve?
losses may turn out to be less than would be indicated by those traditional measures because job openings are so elevated and because the labor market is so strong. Again, that's going to be something we discover empirically. I think no one knows whether there's going to be a recession or not, and
he said
if so, how
he
bad
said
that
the R
recession
word
would be.
He said it. Shit.
And
said it again.
He
knows
our
what he's
job
doing.
is to restore price stability so that we can have a strong labor market that benefits all over time, and that's what we're going to do.
But just real quickly, why do you feel like the window has narrowed?
He explained it. You fucking.
Because we haven't seen
were you asleep?
Inflation coming down. The implication of inflation not coming down, and what we would expect by now to have seen is that as the supply side,
she needs to go back and get another hit of meth
themselves. We would have expected goods inflation to come down by now, long since moving up, and I just think that the inflation picture has become more and more challenging over the course of this year, without question. That means that we have to have policy be more restrictive, and that narrows the path to a soft landing, I would say. Thanks very much.
All right.
Unleash the markets.
Alrighty, guys. Alrighty.
So Ty, we pretty much got a higher terminal rate, right? He pretty much said that, look, if the terminal rate would have been projected today, it would have been higher than the 4.6 medium one. So we did get that out of them, which is hawkish. You did get kind of the pause. People got a little piece of, hey, we could, I think 75 basis points I read is off the table for December. So I think they're definitely looking lower on as far as that's concerned. But that last statement was pretty important to me. He pretty much said that, it's going to be hard to get this soft landing.
Yeah, definitely. So I think you're kind of seeing it in the market here. You had that initial move up and then a massive move down. So I don't know, Mao, I don't know what there is for the bulls to hang on. I see it continuing down from here.
Yeah, this is a tough one. You kind of got a little of both sides.
The rate's going to stay higher, be more elevated. We're not pausing. So I don't know.
You got gold coming down. You got the dollar going up. You have rates going up. So tomorrow's going to be the tail of the tape. And don't forget, we got non-farm payrolls tomorrow.
Yeah, right. Yeah, big number because obviously it's jobs number. You also or non-farm is Friday, but
Friday. You're right. Non-farm's Friday.
Tomorrow's the pounds. The
ECB. Well, we have the Bank of England, right?
The Bank of England's rate decision. So, but remember, I said the next day. You see, the rates haven't really gone anywhere today, but the next day is where you get that continuation or move. So keep an eye on tomorrow where we start headed because that could really give us an indication on what the market's feeling. So, yeah.
Yeah, I agree. I think let's turn our attention non-farm payrolls, but tomorrow's reaction, I think it's going to be important for how the market really is going to react to this Fed.
Definitely.
And it's basically nothing burger here, I think.
Yep, agreed. So back to our merry way down.
I don't know. It was hawkish. It was a hawkish. I mean, he was pretty clear trying to, when they asked him about the positive reaction to the bond market, he started freaking out and stuttering and stampering.
Yeah.
But, I mean, look, the blackout period ends, so, expect Fed governors to be out in full force now, talking this market down if it gets ahead of itself. But I don't know. I didn't see anything that really, either way. I don't know. I just don't know.
Yeah.
And I think that's why, really, if you look at this, very muted reaction from a range standpoint so far. I mean, we're talking 90, not even 90 points on the ES. So,
yeah, true.
Yeah.
So we'll see.
All right, guys. Well, all right. Final tally, Ty. How'd you do today?
Made 13,000 today.
Good for you. Good for you. You beat me.
Yes, let's go, Team Tyler.
Team Mike had a great one last time, but the Team Mike positive, but not. I just
positive during a Fed day is all you can ask for.
I guess. I'm getting ready to trade that away right now, so don't worry about that.
Good for you.
All right, guys. We'll be at Discord. We'll see.
Thanks for tuning in.
Yeah, see if we get any other action going on here.
Yeah, have a good rest of your day, guys. We'll see you tomorrow.